One of the most common questions we always get asked is, what expenses can I claim through my limited company? Or if you're operating as a sole trader, what expenses can I offset against income in order to get a tax or tax deduction? Now, this is a very pertinent question and obviously quite an important question for a lot of director shareholders running through limited companies or sole traders running their companies. And the simple answer to it is, well, it really does depend. Now, contrary to popular belief, there is no prescriptive list that HMRC issue in terms of what is allowable and what is disallowable. There's no such thing, they don't do that. Instead, it's a principles-based system. There is a principle that they actually issue, and this is what we go by. And by understanding that principle and how it actually is interpreted will give you a better chance of making a more informed decision at the point of transaction as to whether you feel a particular expense is more than likely going to be allowable, or is there a better chance it's going to be disallowed for whatever purpose. Now, the first thing I must say to you is please, please, please don't let the tax tail wag the commercial dog. This is a very, very important point. Regrettably, I have dealt with people in the past where they've actually made a decision just based on tax. They've incurred expenses just because they're going to get a tax deduction, tax relief for it, regardless of whether that product or service was of any use to them whatsoever. The first thing is first, you incur an expense for your business if you feel that expense and that product or service is going to be of use to your business. Is it going to enhance your business in any way, shape or form? Is it going to improve revenue? Is it going to improve efficiency? Is it going to save you time? Whatever it may be, it needs to add value to your business. And if that is the case, then it's worth incurring, regardless of whether you get tax relief or not. The tax relief should be looked at as a bonus, pure and simple. However, nonetheless, it's still worthwhile getting that tax relief. You'd all want that, and we understand that perfectly. And that's what this video is all about, to help you explain the principle. Now, what I'm going to do is I'm going to jump onto the computer to help you visualize and to absorb the information that we're going through. This is really about the basics. And once we get through the basics, hopefully you'll come out the other end in a much better position with better knowledge to make a more informed decision. So let's jump on. So the first point of clarification is, what do we actually mean by claim expenses through my limited company? Now, unfortunately, I have had people in the past that have misinterpreted this. And the way it's been interpreted is, well, if £1 has been spent by your business to incur an expense, then that £1 will be reimbursed back to the business or the actual person in question of the business on a pound for pound basis by somebody. Now, that's not always the case. There are instances that the former could be true, in the sense that you could be reimbursed by your client, for example, for certain agreeable expenses. We've seen that, and that's quite common, where if you spent a couple of £1,000s on travel, they will fully reimburse you pound for pound, so then you're getting that money back. But what will never happen is HMRC UK will never ever reimburse you fully for your expenses. That just doesn't happen. So by the definition of claim expenses through my limited company does not mean you're going to be 100% reimbursed for your expenses. What it does mean is that you will get tax relief on expenses that have been deemed allowable through your company. Now, what I've done here is put together an example. And let me just get my laser pointer out. There we go. So I've done a bit of an example. There's two columns here where it's exactly the same business. It's a very simple example, and it ignores the nuances of VAT and other more complex nuances that do exist. But this is just to get the sort of point and the principle across. So here we got the not claimed column, and we got the claimed scenario right next to it. So let's say your company has earned an income of £100,000 in both cases. But in the not claimed scenario, there's been no expenses incurred, therefore nothing put forward for a tax deduction. Whereas in the claimed column, there's been £20,000 physically actually incurred, so paid for, and that's been put forward as tax allowable expenses. So what then happens? Well, let's calculate the profit. The profit is simply income minus expenses. So in the first scenario, the not claimed, the profit will be 100,000 because it's simply 100,000 minus 0. In the second, it's 100,000 minus 20,000, which turns out to be £80,000. So there's your profit before tax. Now, important point, your corporation tax, which at the moment is 19% in the UK, and that is due to fall to 17% over the next few years. So it's a very, very favourable kind of tax for UK company owners.
And the basic math is 19% of the profit before tax. So in this scenario, the absolute value is £19,000. And in this scenario, under the claimed, it's 15,200. So what's actually happened is by incurring and claiming the tax deductible expenses, your company ends up paying less corporation tax. That's what happened. So in this scenario, it's ended up paying £3,800 less corporation tax than if you didn't make those or incur and make those claim those expenses. Now, another way of looking at it is quite simple. For those expenses, what's effectively happened is you've obtained a 19% discount on them. That's what's happened. So if, for example, you went and spent £1 incurring an expense which ends up being tax deductible, then you, in real terms, you're only paying 81 pence for it. Although physically or electronically, however you look at the money transaction, you are paying that £1 up front, but later on down the line, when you come to pay your corporation tax, you're paying 19 pence less than if you never incurred and claimed for that expense. So hopefully that clarifies what it means to claim expenses through my limited company. Now let's go back to the principle that we touched upon earlier on, and it's fairly straightforward in terms of how it reads. So any expense incurred must be wholly and exclusively for the purpose and course of your business. Let me repeat that. Wholly and exclusively for the purpose and course of your business. So if you're going to remember one thing when it comes to business expenses, just please remember that. Wholly and exclusively for the purpose and course of your business. That is what the principle is from HMRC. Now, the difficulty with that is, well, how do you define wholly and exclusively for the purpose and course of your business? And it is open to interpretation. We've come across many scenarios where it's very clear cut that the motivation and the intention was wholly and exclusively for the purpose of the business, and other scenarios where it's very much been, in the balance, quite subjective. And it's anyone's argument. It depends on what angle you come in and what side of the toss you really argue. So a very, very subjective area. But let me add a bit more flavour to that particular statement. HMRC will allow expenses when there is obviously a business purpose motivating the expense, and as long as there is no other obvious purpose. So they've gone one step further in saying, well, that is what we define as wholly and exclusively. So again, let me just reiterate, when there is obviously a business purpose motivating the expenses, two key words in there, obvious and motivating. So what it's looked at is the intent, the motivation, the intent, and is it obvious? Is it clear cut? Sometimes when it isn't obvious, when it isn't clear cut, it may just be let go of. It may be, it's not worth kind of contesting because it's not a material amount. But certainly when you've got material amounts, whether it's accumulated material amount or one-off ticket item, which is a material amount, then, that contention becomes even more sort of intense. So this is a key point, because if there is another purpose, HMRC will certainly dispute the expense. Now, let's just dig in a little bit deeper in terms of obvious and motivating. I'm going to give you an example here, and the example is business travel. So let's say, for example, you're a director shareholder of a company, a limited company based in London. You're actually based in London, and that's where the company trades. That's where management actually all takes place. You've got a client over in Germany. So, you pick up a flight and you take that flight to Germany because the client wants to meet you. It's very, very clear. They want a meeting, so you have to go to Berlin to have that meeting. What then happens is you'll book a return flight. And more than likely, if it involves an overnight stay, then you're going to book some accommodation, a hotel as well. Now, clearly, we can, in this particular example, it's pretty clear already that there is an obvious business purpose motivating the expense for the flights and the accommodation. Now, let's just take one step back. Let's just say that the director shareholder planned a holiday to Germany, Berlin, for a week. And then calls up a client and says, well, actually, you know what, I'm in Berlin, why don't we just meet up and have a general catch up? And the client is like, yeah, absolutely, great, if you're in Berlin, there's no harm in doing that. Now, all of a sudden, the motivation has changed here. The flights are still going to be booked and the accommodation's going to be booked. But is there an obvious business purpose here? Well, it can be argued by the director shareholder that there is, but however, HMRC could clearly say, well, given the circumstances of how it led up, you instigated that business meeting, and therefore the intent was more for personal gratification rather than business. So there you have it. There's where the wholly and exclusively rule will then sort of come into test. There are sort of more examples behind that, but obviously, time restricts me on this video to go through each and every one. What there is a link below, and if you want to click on that link below, what will happen is we do run a service where if you have particular complex scenarios such as that could get even more complex than that, and using the wholly and exclusively rule, it's still not clear cut to you, it could be a high ticket item, and that's where it could become even more contentious, then please follow that link below, because we do run a Q&A service where you can pose your scenario, your question in terms of a certain expense, and our accountants will be more than happy to answer that, given our professional knowledge and the level of sort of experience that we have in dealing with these kind of expenses, what we have and have not seen. So we can give you a real good steer on that. Just follow the link below. Just a point on general practice, all expenses must be supported by valid receipts and documentation, except in special circumstances where dispensations are given. Dispensations are very, very rare. They are given in very special circumstances, but I won't go into that so much. It's always best to get into the habit to ensure that you've got the right kind of receipt or documentation for any expense. Now, it can be impractical sometimes to collect receipts for very small transactions. I mean, certainly if you're buying a coffee in the morning, £2-3 coffee, to collect receipts and stick them in your pocket on a shoebox, it's very impractical. I mean, we're moving away from that paperless system. What can happen there is certainly if you're using, we're all heading towards a cashless system here at the moment. You can use your debit or your credit card contactless, and normally the transaction is enough to support that. But certainly in higher ticket items, if you're spending on hardware, software production, anything like that, clear receipts and documentation is needed. You must have that, otherwise it will get challenged. And it comes on to the other point below. You cannot claim for something you have not incurred. Now that is really, really important, because even if you've incurred it, but you haven't got the right sort of level of documentation to support it, it could just be a transaction on your bank account. But a lot of times, if you look at transactions on bank accounts, the description can be absolute gobbledygook. It's not really clear all the time as to what it pertains to. So from HMRC's point of view, they won't rely on that. They won't accept that always as evidence. So always keep your receipts and documentation, just in case you are ever investigated or challenged on certain items. Contractors and freelancers. Now, there are some special rules when it comes to expenses for contractor and freelancer-based limited companies. One of the examples is the 2-year rule. Now, I'm not going to go into it in any kind of detail in this video, but there is this is covered, or these rules are covered in another video in more detail. If you get to the end of this particular video, or if you subscribe to our channel, certainly what we'll bring up is the whole sort of a selection of videos that we have, and you will find a video which pertains to contractors and freelancers special rules for expenses. So do go there, or wait to the end of this video, and hopefully it should come up at the end where to go next in order to find that video. Now what I'm going to do here is just list the common type of expenses that are incurred by contractors, freelancers, and SME businesses, small businesses, trading businesses alike. This list is certainly not exhaustive, but probably covers around about 75 to 80% of the common quantum of expenses incurred by most limited companies. There are, more than this, but this will certainly cover the bulk of it. So what we've got here is accommodation, accountancy fees, books, periodicals and professional subscriptions, business insurances, director salaries, employee salaries, hardware. And incidentally guys, there is a video for each and every one of these expenses, and if it doesn't exist now, it is currently under production. So there will be a video for each and every one of these expenses, because what I really want to do is really get under the bonnet of them, give you the meat, and give you some different scenarios as to where it would be allowable typically and where it wouldn't be allowable typical according to our experience and HMRC rules. So there is a separate video for all of these. It's not covered here. This is just a list to give you a bit of a flavour. Moving on, home office and rent, life assurance premiums, meals and subsistence, mobile phones, telephones, pension contributions, software. I mean, that could be software subscriptions. It also could be the production of software, so software build, training, travel expenses. So these are typical expenses that are currently being incurred or will be incurred by you if you have a limited company, even if you're a sole trader and partnership. Now, some typical non-allowable expenses. So again, by principle, most of the time, in most occasions, these kind of items are non-allowable, but there are special circumstances where they will get tax deduction. And this is why I say there's no hard and fast prescriptive list of yes or no. It's not linear, it's not black or white. So entertainment is a classic area. It's an area where a lot of people, is still a misconception that if I was to entertain clients, I'll get tax relief. In most cases you won't, but there are some special circumstances that you will, and we'll go through that again in a separate video. Clothing, again, in most cases not, but again, special circumstances that there is. And generally speaking, expenses where duality of purpose clearly exists. What is duality of purpose? Well, duality of purpose is where it's very clear that there's a personal gratification to that expense. So if we go back to the motivating factor and the example of that flight to Berlin, for example, then once we got the full information that the director shareholder was actually planning a holiday there and thought he'd just double up and go and meet a client, well, there is a clear duality of purpose there, and it clearly exists. Well, therefore, more than likely HMRC will disallow that particular expense of the flights and the accommodation. But anyway, I won't go into too much detail on that. Again, it's covered by a separate video. And certainly this concludes this particular production. I hope you found it useful. And just as an end note, again, there is a link below. If there's any kind of questions you have in terms of specific expenses that you've incurred or specific scenarios that you're facing that, again, this video can't help you clarify, then just follow that link below. And we do run a service where our accountants will take your questions, your scenario, and give you answers on your particular scenario with regards to the expenses. So professional accountants who have done this for many years, seen many different scenarios, and can really help you clear the mist and give you clarification on whether your particular expense would more than likely be allowable or not, as the case may be. If there's any other questions you have or any other expenses you want us to cover, please comment below, like and subscribe our channel, because there's going to be a lot of productions coming out in terms of giving you detail, and the real purpose and objective is to really give you the knowledge and to enhance your financial literacy, get through the smoke and mirrors of all these rules and different guidance points, and really break it down and simplify it for you, as a company owner or a sole trader partnership, you can make more informed decisions at the point of transaction, and you're armed with that particular knowledge. Thank you guys for watching, and I'll see you on the next production.